Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. I've said repeatedly in this commentary that the most significant feature of this market in recent weeks has been, and still is, even now, the very significant lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24, in January, February, and with some mild finessing the lows of late July and early September, down in the 15,840 and 15,600 zone, and most recently late October and November and early December last year, and I suppose also the congestion in January and now February this year. At this point, I feel obliged once again to mention the big descending scallop pattern I've been going on about for months and months, and what it may mean within the near-term universe. So the key level has been and is the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it. A significant break below this would give a downside potential for the descending scallop pattern of target X down at 13.8 in the 13.830 zone. It still all comes down to what the market has done, whether it has finished fondling that key 15.840 zone. As of this week, well, we might well have done. It would depend if the recent highs in the 16,200 area overhead hold down the latest move higher. Right now, prices are trying very hard to push up through the dark blue neckline, which is currently at 15,900, of the late July to late November 2024 head and shoulders top pattern. Now, I originally thought the crossover of the now broken May 24 to January 25 downtrend, currently at 14,525, down through the dark blue neckline back in the middle of January, might have finally started that move lower. I was wrong. Yes, we did see prices move lower back then, but that fizzled out at the start of February. Right now, I am not convinced as to whether the market will exceed the 16,200 area overhead or drop back down to the 15,000 zone below. LME 3-month zinc. Much like LME copper and LME aluminium, there are a number of patterns here that have affected this market in recent times. The first is the broken and breached, but still refusing to die, old dark blue upper time above, currently at 29.28. And the middle time below, currently at 27.63, of the May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 upper bull channel. This one will not die. As recently as in January through to now, the market is playing between the broken dark blue upper time and the broken dark blue middle time. We are in between these two right now. Then there is the purple lower time, currently at 28.68 of the somewhat newer February to August 2024 bullish shift pitchfork. Prices are on the verge of pushing once again below this pitchfork, but for some reason it will still not fully let go. So watch this carefully, at least for the next week or so. In the meantime, whilst all these big picture patterns sort themselves out, we have overhead the gold long moving average currently at 29.19. plus a small congestion band 29.05 to 29.17, whilst below the dark blue middle time, well, we have the February and September 2024 lows respectively at 27.06 and 26.79. There doesn't seem to be much down there until the March 2021 low at 26.27. LME 3-month tin. There are a number of patterns here affecting the market. The first I'd like to discuss is the bright red neckline, currently at 32,790 of the uneven August to November 2024 head and shoulders top. This bright red neckline had previously been closely aligned with the gold long moving average, currently at 31,240. But in November last year, they parted ways, and the gold long moving average had most recently acted as a support in turning prices higher, along with another pattern, which I will shortly discuss. The next is the flatlining gold long moving average itself. This had capped prices in early February, and this past weekend, last Friday and yesterday, halted the decline, along with another pattern, which I will shortly discuss, forming a possible pipe bottom. Okay, so it's about time I discuss this other pattern that I've mentioned earlier twice. It is made up from the green upper trend line, currently at 31005, and the bright green lower trend line, currently 3810, of the November 24 to February 25 ascending triangle. That could very well be seen as an ascending wedge pattern for the same move. The bright green lower trend line is very associated with the dark blue lower time, currently at 3425, of the large November 2023 to November 2024 bullish shift pitchfork. Enough that you might consider either of these as the lower trend line. 4 weeks ago, I detailed the basic constructions of this pattern, and then 3 weeks ago with the move up over the green upper trend line, and especially the gold long moving average, I placed a primary potential target X in what was then topside in the 33,150 area, and a secondary harder to reach potential topside target X1 up in the 34,500 area. Last week the market reached the primary target X and stretched up, trying to reach the secondary target X1. However, the market did not manage it at that time before it dropped back down last week, all the way down to the comfort of the gold long moving average and the broken green upper trend line. Prices are now, today, deciding whether or not to try it once again up towards target X1 or whether to give up and do something else instead. Now I await the market's response, as one way or another I will retire target X1, as I will retire target X, which I'll do that today.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.